HIMS is up 20% even after they got hit with a lawsuit and they're facing penalties for credit card disputes. So I'm going to go over exactly how it's going up 20% and if it has more room to run. I'm also going to go over the stock market update and my $100,000 challenge, week 64. Let's get into it. If you can, please give me a like and subscribe. I really appreciate it. So let's get into why is HIMS stock up 20% this week. Now, as you can see over the last 5 days, it's up just over 20%. It was up 6% on Friday, but there's still 27% short interest. So there's still a lot of shorts out there, which I think are going to get destroyed eventually. But let's break down exactly what's been going on with HIMS. This is their earnings. As you can see, this is their growth rate. Now, this is from 2021 to 2022, 23, 24, right? The growth of their revenue was going, I mean, it was kind of slightly going down from 104 to 88%. But I mean, when you're growing your revenue from between 88 to 100%, that's great. But then as you can see, it really started to go down. This was in 2023. And into 2024, it went from 88 to 83 to 47. Then it started to slightly go back up again from 45 into the 70, 110%. So that was looking good. Then from that, since March 2025, it went from 110, 72, 49, 28, and then 3%. So their revenue growth was just continuing to drop significantly. Well, then they just changed that. Their last quarterly report, they went up 38% on the revenue. So that's good. There's at least the growth momentum is now back in play with HIMS. So that's obviously good. This is what they said on their earnings. We expect our domestic business to continue accelerating through the second half of this year. So that's good, especially because their international is obviously going to grow. We need the domestic to grow a little bit better. As a result, they raised their 2026 revenue outlook and building increased conviction in their 2030 targets of at least $6.5 billion in revenue and $1.3 billion in adjusted EBITDA. So again, they are sticking to that target that they've been talking about for at least a year. Now, this is if you look at the 3 months ended, right? Just this quarter, they did very well. As you can see, the subscribers went up 19%. The monthly revenue per average subscriber went up 21%, which is really good. It's at 92. And then the United States revenue was up 16%. The rest of the world was up 1,600%. Right, so the total revenue was up 38%. So yes, the rest of the world is going to continue to grow, which is great. At this rate, obviously, if it were to continue to grow at this rate, it would catch up to the United States revenue quickly, but that's just not going to happen. But it is expanding quickly, and it's good because it's going to continue to add to their revenue growth. But then, as you can see, the 6 month ended. This is why the first quarter really hurt. You know, it just hurt their whole year outlook in a sense. But at the same time, this is part of the process, right? Because when you look at it, it actually went up 4% monthly revenue per subscriber. And then the United States revenue is only up 3% if you take in the first quarter and the second quarter. So that first quarter was devastating to them. But that was just a transition phase of going from their compounded GLP-1s to now serving the Novo Wegovy, right? So that was the big one. But international is growing significantly. As you can see, even the subscribers is going up. This was the biggest jump that they have had since, what is this, Q3 of 2024, right? They went up 300,000 subscribers, which is pretty big. And then again, the revenue, the total revenue and the average revenue per subscriber per month went up to $92, which is, again, really good. They need to be hitting at least $90 per month to be reaching their goals, which I think is going to happen and eventually get 100 to 120 per month. International revenue, as you can see, it's gone up very significantly as we kind of predicted, because now they're opening up with eucalyptus and everything. So and they have Zava, H&H Canada, Honest Health. So they have all these things going on international that are growing. This is what they had on the outlook. That for the third quarter, they expect revenue of 880 to 900 million. And then for the full year, they expect 3.1 billion to 3.3 billion. Now, it's very important to think about, like, so this is what they did, right? So in Q3, the year-over-year growth is predicted or estimated to be about 47 to 50% year-over-year growth, and the whole year is about 32 to 41% year-over-year growth. Now, what's very important to know is that in the first quarter, right, or let's go back, the fourth quarter of 2025, this is what they said the first quarter was going to be, right? And if you look at, yes, even though the first quarter, it wasn't great, the fiscal year, you look at how much they estimated the actual 2026 whole year is going to be, 15 to 24% year-over-year growth. That made investors concerned. Then the next quarter, they bump it up from 2.7 to 2.9, now 2.8 to 3 billion, right? 3 billion. And so now that's a 19 to 28% year-over-year growth for revenue, right? This was in quarter one. This is what they were estimating for Q2. Now, after they release Q2 earnings, this is what they're estimating Q3 and the whole year of 2026. 32 to 41% year-over-year growth. So as the year has gone on, they have increased their estimates for how much they're going to be making for the year. And as you can see, you go from 15 to 24% all the way to 32 to 41%. They doubled basically their estimated revenue for the year in terms of the growth. So in the beginning of the year, it was not looking good. You can even say in the fourth quarter of 2025, when they put out that they think they're only going to grow 15 to 24%, that looked bad. But it looks a lot better when, they're continuing to raise that estimate. So it went up 20% this week, and let's exactly go over why it did it. So the CEO pushed back on the FTC privacy lawsuit. If you know, they had this lawsuit from the FTC about canceling the subscriptions and releasing some of the information. So Andrew Dudum, the CEO, forcefully pushed back, framing the legal challenge as an overblown headline issue and emphasizing years of active regulatory cooperation, which significantly alleviated market anxiety. They give reassurance on GLP-1 pricing and unit economics. So Dudum outlined a roadmap where out-of-pocket costs for GLP-1 treatments could drop to $40 to $50 per month, pointing to scaling volume and improved long-term operating efficiency. Now, that is possible, of course, but one thing that people are not really keeping in mind, I know 3 to 4 years doesn't sound very close, but 3 to 4 years is a big deal. We're talking about their 2030 targets, right? They have 2030 targets. You know what else happens in 2030 of December? GLP-1 becomes patent free. They don't need to talk to Novo about Wegovy at all. They can compound it all themselves, collect all the profit that they want, and then their margins are going to skyrocket. So yes, for the next 4 years, it's not going to be as good. Even if they try to do whatever they want to do, it's still going to be harder because they're going to have to really go through Novo, as far as I know. But in 2030, the end of 2030, done. So that's something that people aren't talking about because it is 4 years away. So, but we also have peptides, all that other stuff. Anyway, they have strong underlying growth tailwinds, right? So again, their growth is now coming back, where revenue jumped nearly 40% year over year, driven by 125 branded Wegovy shipments and strong international expansion. So now the sentiment was lifted, right? Because of the momentum. Now, instead of losing revenue growth, it's starting to grow again. And the short covering, as I said, there's a lot of shorts and oversold rebound. So there is, my computer's in the way, it triggered an aggressive dip buying and short covering across the market, which, because after their earnings, it shot down. And so, of course, a lot of people bought the dip. A lot of shorts had to, and as it was starting to go up, shorts had to cover. So that's kind of what happened recently. So as we kind of discussed, he responded to the FTC lawsuit and sees the prices of GLP-1 falling. He said, I think it takes time for people to understand how to do it the right way, and we've worked many years with the FTC to walk them through that. So he's saying, hey, we've talked to the FTC, we've worked with them. Look, we're trying our best, right? So that's helping people out. Okay, shouldn't be too bad. We are active disruptors. We take that head on, and we're willing to do it. So they're obviously a company that's gonna disrupt and possibly get in trouble sometimes. They might be one of those, hey, it's easier to ask for forgiveness and permission type of thing in order to revolutionize how we do healthcare. They're also facing penalties from Visa for credit card disputes. Now, Visa will assess penalties on hims and hers, close to 75,000 in September after receiving thousands of complaints related to credit card disputes. The telehealth provider, hims and hers, is now put into Visa's acquirer monitoring program following a rise in disputes. Each dispute carries an $8 penalty. Has to do with the weight loss drug subscriptions. Now, to exit this program, hims and hers must cut its dispute rate to below 1.5 of transactions for 3 months. And hims and hers, Andrew Dunham said, "We take our responsibility to be transparent with our nearly 3 million customers. That is why we built a checkout process that is clear about the cost of hims and hers membership and any medication the provider chooses to prescribe." Now, one thing I will say about this, I'm kind of confused. I have had multiple subscriptions with Hims. I've been able to cancel immediately, no problem. Now, granted, it was in the last 6 months, so maybe these are things that happened longer than 6 months ago, but I mean, it was very easy. I just had to click manage subscription, cancel subscription. Do you want to? Yes. Boom, cancel. So I'm confused. Are we talking like just senior citizens that are trying to deal with an app? I mean, I have to imagine hims and hers, the demographic is going to be between 18 to 35 to 50-year-old, like 45. Like, we're not dealing with people who are technologically, unable to do things like this. These people should be somewhat tech savvy, and for me, it was very easy to cancel many things I got, and I'm like, you know what? I don't like this. I don't want it. I actually did try Wegovy, which was the weight loss, thing, and I was just looking into it. I, want to lose a little bit of weight, so I tried it, and I did it for 3 weeks, and I did not like the way it made my body feel. I just didn't like, and so I was able to cancel it before I got the renewed, sent over to me, and it just says, hey, you have to cancel by this date because we're going to send you a new one. So I did it. I canceled it. I'm just confused on why. It's so why it's so difficult for people to cancel. So that's what it is for me. So even though we look at the stock, it's up 132% since March 1st. That's great, right? You look at here, it's about $15 back down there. Now it's around $33, $34. So it is up 132% since March 1st, which is great. But, and so people might be like, now, okay, it still has, it might be going down. And I mean, as you can see on the left side of this, it's still down 48% since October 2025, right? It's down a little bit even more if you're talking about all-time highs. But we're still talking about cut in half. It's still half of what it used to be. Now, again, what it was trading at before was probably... it was overvalued, right? And now you could say it's probably, roughly valued, like, okay, this is where it should be valued, or maybe even slightly undervalued, especially with how it can grow over the next 3 to 5 years, especially, like I said, after the 2030 GLP-1, blah, blah, blah. I think they could skyrocket. So there's still a lot of room to run for the stock, even though it's up a lot since the big crash and the lawsuit and everything. Now they're doing a lot better, but there's still a lot of room to run. So that's just my opinion on HIMS. Now, let's go over the stock market update. Finally, this is what's been going on. Now, this is the S&P 500. It's up 21% since March 30th. It's slightly down from its all-time highs, but not really. So I didn't even put the down, right? Like I did with the NASDAQ. So NASDAQ is up 26% since March 30th, but down 3% since June 2nd. So clearly there's some difference right now with the technology, right? Because that's the NASDAQ and the S&P 500. So technology is having a little harder time right now. And here you go. This is over the last week. Technology is down. Technology services, even finance was down a little bit. Retail, producer manufacturing, all those were down. But you look at health technology, HIMS, that was great. And then energy, minerals, and stuff like that. So there's a few things that went up, but not a whole lot, right? I mean, it was bad for technology. So the NASDAQ did not have a good time last week. This is the AAII Sentiment Investor Survey. So as you can see, people are still pretty neutral compared to, what used to be, or actually, no, sorry, people are not neutral. People are picking either bull or bear. Right now, the bears are still up 39%. It's up to 39%. I should have actually circled that too, compared to the 31% that it usually is, right? So that's still a big difference. There's still 8.5% more bears than usual, right? And we're still actually down 2% on the bulls. So it's still possible. We got some room to run here. Now we're also in the neutral, which is good. Get away from the greed. We were greedy a little bit, right? A week ago we're in the greed. A month ago we were fearful, and a year ago we're back to neutral. So, kind of bouncing all over the place as usual. It's very emotional, but I do like this to be pulled back a little bit more towards the fear, so that way it provides a little bit more buying opportunities. What happened last week? So the Fed, they had their meeting in their minutes. So it's signaling a data-dependent, cautious approach to future interest rate adjustments. Then we also had some retail earnings from Walmart, Target, Home Depot that showed consumers are becoming increasingly value conscious and pressuring margins despite steady overall foot traffic. So people are still looking for a good deal even though they're going into the stores. And then the housing starts and regional manufacturing gauges soften while weekly jobless claims remain steady, reinforcing a theme of gradual economic cooling. So, the economy is cooling down slightly. So what to look for next week? We got Jackson Hole economic policy. So that's the Fed chair's remarks will be scrutinized for forward guidance on interest rate trajectory. So again, just what is he going to say? And we're just going to make a big deal out of it. NVIDIA's earnings, this is probably the bigger thing out of all of the, what's going to happen. They're releasing their earnings. And then we have July core PCE. It's going to provide the latest look at underlying price pressures alongside personal income and spending data. So nothing too crazy, obviously, but NVIDIA is going to be part of that earnings, which we're going to go over right now. So we have Dick's Sporting Goods, Kohl's, Best Buy. Those I think are going to kind of, give another look on how consumers are doing. Intuit, NVIDIA, Salesforce, CrowdStrike, Okta, Marvell, I've heard both. Those are all going to be AI and tech plays. So those are all going to be good to watch out for as well. So that is the update. Now for my $100,000 stock market challenge. If you're still watching this, I appreciate you. I appreciate everyone who is still watching this and has been keeping up. It is hard to do this sometimes every week with my crazy life. But I try to I do get it done as much as I can. I've skipped only a couple weeks. Now, I am at $11,034.84. The biggest reason why is HIMS and Celsius. They both, over this 1 week, went up. Wait, why does it only say 10%? I think it went up 20%. Yeah, that's kind of weird. But HIMS went up, the week performance. That just doesn't seem right. This must be something. It's not calculating one of the days or something. But Celsius is up, HIMS went up, both of them went up significantly, which is great. And then Meta went down. I actually trimmed my position. I now only hold one share. I had fractional shares as well. I actually sold the ones that that were higher price. I maybe should have sold the ones that I had bought in the lower, but this way I have my total changes up. The one share I have has a lower cost basis. That's just what I did. And so yeah, right now, week 64, my goal was $12,785, but I'm at $11,000. That's still good. If you look at last week, I'm up 5%. Against the goal, I'm still down 13%, but I'm gaining on it. I mean, I was down 20%. I mean, it was, I'm trying to get there. Since June 2nd, I am now up 50%. But if you take away all my deposits, I'm actually still down 2%. But this is the closest I am getting to breaking even, at least. Now, if you know anything about HIMS and Celsius, where it was at June 2nd, 2025, it was a lot higher than what it is right now. So if those stocks go back to just breaking even from that date, I will be significantly higher than what it is. So with those stocks going down so much since that, it's kind of, I wouldn't want to say ruin my channel because I knew it was going to happen, but I was holding on to the stocks. I believed in them. I have such a good cost basis. I wasn't going to change anything about it. So I did buy one share of Netflix. And like I said, I sold my fractional shares of Meta, which was, about 0.84%, something like that. So I got about $460 off of that. I did, like I said, buy 1 share of Netflix at 80, and then I also deposited the weekly $50. So I gained 430 for the week to, kind of give me some room to buy some stocks. I wish I had a little bit more room to buy for Celsius when it went down to 23. I didn't pull the trigger fast enough because it popped up the next day. So anyway, thank you for watching. I really appreciate it. If you can, give me a like and subscribe. Yeah, it's been a crazy week. I haven't been posting much. Kids are finally going into school, and it's been a crazy week. They're going to this new school, and so it's just been a crazy time. But I am going to be posting more, and so that with them going to school, it's going to be a little bit easier. So, yeah, that is my update. I hope you guys enjoy it. Please, again, give me a like and subscribe. I appreciate all the support of anyone that watches this and gives me the likes and the subscribe. It does help the algorithm as much as you may not think so. It really does. So, yeah, go ahead and give me a comment. Just say hi or whatever. Show me some, tell me some stocks that you watch that I don't watch or don't have and stuff like that. I'm always interested in looking at some other companies. So anyways, yeah, thank you for watching, and never forget to earn it, save it, invest it, buy low, sell high. I want assets, not liabilities, and you can count on compounded interest.